You're watching Newsfeed AM. Let's pick up on the markets now. The local index facing higher global markets at the start of the new week. All eyes will be on the South African Reserve Bank on Thursday for its latest interest rates decision, with a hike expected. Wayne McCurrie is from FNB Wealth Investments, portfolio manager there, and he joins us now to talk us through how the JSE is performing in early trade. Wayne, good morning to you, and haven't spoken to you in this new year, so Happy New Year. Let's begin the conversation with your quick overview of how the markets are faring in early trade.
They're doing very well. The markets are quite nicely up about 0.75%. And it's really right across the board. And that's on the back of very, very strong USA markets. On Friday, the NASDAQ was up almost 3%. The other markets were up between 1 and 1.5%. So it's a good start so far to the week.
Let's talk commodities. Oil prices slipped in early trade as investors continue to assess the global demand outlook and the various risks to the Russian supply.
Look, Russian supply by and large is almost out of the market pricing, if you like to term it like that. You can look specifically at gas. Russia supplies a massive amount of gas to Europe and the rest of the world, and the gas price at the start of the invasion soared up hundreds of percent. It's now fallen so much it's actually lower than what it was before the Ukrainian war. So I think the oil price is held up specifically by China reopening, but as you mentioned, there are, I think, quite big risks to the oil price going lower because the other major economies in the world, the USA, UK and Europe, are going to experience some sort of mild recession in the first half of this year, and that should bring down the demand for oil. So I think maybe we get a slightly lower price over the next 6 months, maybe trending towards 80, somewhere around there, rather than the 85, 86 where it is now.
Yeah. As we said at the beginning of this conversation, Wayne, the focus this week will be on the Reserve Bank's MPC decision around interest rates. And yes, what's important here is whether or not the MPC still has appetite to increase interest rates, or are they likely to leave these rates unchanged?
Well, it's very unlikely they'll leave them unchanged. There's many factors they've got to take into account. But the good news is there's a very good chance we could only see 0.25% rise this week. It'll more than likely be 0.5%, but I think it'll be a split vote. So we're either going to get 0.5% or 0.25%. But if we get 0.5%, that's the last. Then we're through this cycle. Inflation, and globally has peaked and it's falling. If we get 0.25% this week, maybe there's one more 0.25% to go. So the good news is we are either very near the end, or on Thursday we'll be at the end of the rate increasing cycle. Then hopefully second half of this year, we'll see interest rates come down at long last.
Well, let me press you a little further on that, Wayne. So you're saying, in all probability, if it's a quarter, is that 25 basis points, or if it's 0.5%, then that's 50 basis points. Why not just get consumers to feel the pain once and for all, as opposed to 25 basis points this time around and then in the next cycle?
Yeah, I hear you. Look, I suppose you'd rather do things incrementally than a big bang approach, because if things are done incrementally, people can plan a little bit better, they can get their cash flows a little bit better. But quite frankly, it doesn't really make much difference if they push it up 0.5% and just get it over and done with. And then that's the end of the increasing cycle. And then, as I said earlier on, hopefully by the second half of this year, we'll see interest rates falling again, which will be great relief for the consumer.
Yeah. All right. Let's conclude the conversation then with company news. Attack reporting improved retail trading figures for November and December 2022. Yes. Your quick assessment of the performance of this company?
Sure. Look, remember, Attack owns huge shopping centers. Mall of Africa, I think, is their biggest one that they own. So they're talking about the turnover growth of the shops within their shopping centres. So it's not really their turnover growth, even though they do share in some of that growth. But the bottom line is it's exceptionally good. So despite load shedding, despite all the bad news, despite the higher interest rates, they've seen some phenomenal increases. I mean, restaurant sales are up 127%. Clothing's up 20, 30 odd percent. Almost all of the sectors they're reporting on are showing good double-digit sales growth. So we had the Woolworths update, which was actually quite good. We've now had the Attack update, which is, I think, exceptionally good. The Mr. Price update wasn't that great, but I think that's specifically on apparel and clothing, etc. But it looks as though the November, December, and the Black Friday and all of these trading periods looks reasonably good so far for the South African economy. It looks as though we had a fairly good November, December.
Wayne McCurrie is with FNB Wealth and Investments. Thank you very much for that markets update.